Today, I'm going to break down five blue chip stocks that are all worth a closer look right now. Even though the stock market is experiencing a massive sell off, this is the time you want to start buying. This is the time you want to start buying. Remember, this is not financial advice. I'm just here to navigate you to tips that you can leverage to make more money. All right. So, I'm going to touch on companies that cut across tech, finance, and healthcare. Let's go. So, why these five stocks? Every one of these is a large established US company that is riding a real verifiable tailwind. So, together they cover a lot of ground. So, there's the AI infrastructure, there's the healthcare innovation, there's a premium consumer spending, and a genuine turnaround story. And notice what they have in common. Durable franchises. They have durable franchises with strong balance sheets. So that's something you want to look out for whenever you're shopping for a company to invest in the stock market. And this idea is universal. This practice is universal. Anywhere, any trading exchange platform you find yourself, if you are trying to look up stocks, you might be interested in looking at their fundamentals, their pricing, their balance sheets, the concrete catalysts that can drive momentum. So recent earnings momentum, raised guidance, all of these are things you want to keep an eye on when you are looking up these stocks. So we're going to start with the first company, which is J&J, Johnson and Johnson, ticker symbol JNJ. It has grown 30% year to date. The stock is up roughly 30% this year against the S&P 500, which is just around 8.5. So it's crushing the market. The engineer is oncology. In the second quarter, the J&J cancer drug Darzalex topped $4.2 billion in sales, up about 19%, and two other cancer drugs, Carvykti and Tecvayli. Yeah, don't know where they got those names from. So they grew around 50 and 57%. So the management is openly targeting number one in oncology by 2030 with $50 billion in sales. On top of that, they just launched Icotide, the first oral pill of its kind for psoriasis, which they think could do $5 billion in peak sales. And their new Ottava robotic surgery system got FDA approval. So they are killing it. So if you are looking for a robust, highly resilient healthcare stock to put your money in, then J&J. Look up J&J, especially in this era where everybody is going AI data center crazy. You don't want to do that. Don't pack all your money in AI data center stocks. The next company I have here is Intel. Intel has grown $16 billion. They had their best earnings quarter in the last 15 years. They got their best in this earnings quarter. Intel's fastest quarterly growth in about 15 years, $16.1 billion. That is up 25%. The AI tailwind is real. Their data center and AI revenue jumped 59%. The operating profit actually swung positive, $1.8 billion versus the $3.2 billion loss that they had about this time a year ago. And a lot of the thesis rests on their 18A manufacturing process, which is meant to go toe-to-toe with TSMC, Taiwan Semi. So the adjusted earnings blew past estimates. It's big, but there's a $12.5 billion accounting charge that is tied to their CHIPS Act escrow shares that push them to a net loss on paper. Well, those things are there, but the current CEO is crushing it, Lip Potem. These are brilliant guys that are running the business and they are bringing in the opportunities, the money. So currently is around $87 per share as of the time of recording this video. So if you want to get into a long-term trade that has the capability to double your investment in the next 1 year and the next 2 years, then you want to start looking at Intel. Intel is pivotal. So the niche they are carrying for themselves is pivotal to the US economy. And you don't want to be left behind when they finally run, when they start pick up and start running. The next stock is Corning. Corning. Corning, this is my favorite quiet AI play. So this is the glass that connects the chips. So it's a glass manufacturing company, originally a glass manufacturing company. Their optical communication sales grew 32% to over $2 billion. They hit record profitability, and sales tied to AI data centers nearly doubled. And look at the customers lining up. Look at the customers. They have Amazon, Meta, Nvidia, multi-billion dollars investments, partnerships have been netted in the last quarter. So right currently they I think a couple of days back they released their earnings, good numbers, but sell off. As of October last year, Corning was like $87. So for some of us that got to that $87 and then it rose up to $270. This is one of my best stocks in the last 1 year. So I grow to that. When these stocks are growing, make sure you take profits. Don't just be looking at growing, because once they make a parabolic move, they're gonna come down. You don't want to be crying when they come down. So take profits along the way up, on their way up. This is something I want to hold for long term as well, because of the pivotal role they play in wearables, in fiber optic, glass for data center, glass manufacturing for data centers, for construction. They're into solar, a lot of things going on for them. So you should want to look up, read up more on Corning, and if you want to buy, this is a good time to buy, because the numbers have been crushed. The stock price has crashed significantly. So if you're getting ready for the next round of rally, then you should start looking at Corning. Then there is American Express. This is the premium consumer story. Has a strong quarter earnings. They had $4.53 a share for EPS. They are up 11% on revenue of $19.6 billion. So that's their fourth straight quarter of double-digit revenue growth. If you have a Visa card, if you have an American Express credit card, I don't know why you won't be investing in American Express. These guys are printing money. They are printing money. So the premium strategy is compounding. The platinum card refresh card fees is up 15%, a return on equity around 36%, which is elite. And here's the part I love: about 70% of their new international platinum accounts are millennials and Gen Z. So they are locking in young. Can you imagine? They are chasing the young folks. That's the world we find ourselves. But I'm not going to bother myself about that. I want to make money, right? So if you are stuck in all those fundamentals, then you might derail yourself. So Amex, if you are paying interest charges on your cards, then this is a cool way to take your money back from Amex. Invest in Amex. You have a credit card from Amex, go ahead. There's also CVS, right? So there's also CVS. So CVS is another healthcare stock. So for CVS, is there an Aetna turnaround with 5 straight earnings beats? All right. So it's with CVS, they have an adjusted earnings per share $2.57. So it's pivotal if you are looking for something like alternative investment away from tech, from AI. J&J and CVS is one stock you want to have in your basket. Step back here and let's look at what ties the entire basket together. Number one, quality franchises. These are large established leaders with strong balance sheets, high pricing power. These are not speculations. If there are speculative trades, I will let you know. These are grounded, that have been tried and tested over time. They have a real catalyst. So each of these has a concrete driver. They are the AI build out, the drug launches, the premium spend, promo turnaround. All of this contributes to the real catalyst. Most of these companies pay dividends. Yeah, you might want to look up which one exactly pay dividends, but I mean J&J, CVS pay dividends. Don't quote me on that. So they pay dividends. So those are some of the reasons why you want to invest in them. Now, let's be honest about the risks, because no stock is a sure thing. Number one, valuation. Several of these have already run high, especially Corning and CVS. They have roughly doubled. J&J is up 30%. A lot of good news may already be priced into the rally. Intel has to actually prove its turnaround while the stock is sliding. CVS faces regulatory pressure. J&J's MedTech and pipeline have to deliver. And third, macro exposure. American Express rides consumer spending. So if interest is going up, that might affect consumer spending. If interest is going down, that means they're going to borrow more money, run their credit card. So either ways, then Corning and Intel, they ride AI spending, and interest rates and the broader economy hit all the 5 stocks I shared with us. So these are some of the things you want to your pros and cons. So let that guide your thoughts as you are researching on them. So as an investor, how am I going to approach this? Number one, do your own research, right? This is not a financial advice. This is just to turn on the light switch in your head so that you can continue to run your own research and get the best opinion on all of these stocks. Match your time horizon. Okay, so these are multi-year pieces. Align them with your own goals. These are long-term investments. There's no get rich quick here. You want to build wealth over time. And for some of these stocks that have run so high, you may not want to just buy heavy. Dollar cost average. Buy on the way up, buy on the way down. Dollar cost average, especially after sharp runs. Diversify your portfolio, size of positions. No single name should dominate your portfolio. Spread the risk across the basket and beyond. Consult a licensed advisor. Yeah. So, if you don't mind the fees, yeah. So you can reach out to a licensed advisor for further guidance. And that's the breakdown. All right. So this presentation is for educational and informational purposes. So it does not constitute financial investment or tax advice. All right. Don't quote me anywhere. I did my research to put this together. See you on the next one.